Welcome to the new Crypto Week. It's Ted here with Bodies and Wicks. If you don't know what that means, it means a candlestick. Yeah, candlestick for technical analysis, because that's how I do my technical analysis for smart money. And we're also going to be talking about what could possibly happen next week. And if you've seen my previous videos, not much of my analysis changed, but we'll get into it. So we'll see what happens. Not long intro this time, I swear to God. I swear to God, it's not a long intro this time, so hang tight. Alright, if you do like smart money, what I would like you to do is go ahead and click that like button, hit the subscribe button. If you don't understand some smart money and you want to know more, do the same. Hit that subscribe button, hit that like button. I'll try to come out with a video at least once a week. I'm just extremely bogged down with work right now, or else I'd be trying to come out with more. But what I am going to try to do once a week is give you as much good information as possible. Also, I'll give you some information off my locals. I am giving away basically 1 month free to my locals channel. Access to it, I'll put the link in the description. I think I've already tweeted it out already as well. So if you can't find me, I'm at bodiesxwix on Twitter. I may have put it on Facebook, I'm not for sure, but I'm trying to give out the full month and access to my locals because that's where a lot of my signals are going to be coming from, and they're going to be coming from Core. A lot of people, if you don't know what that is, I'll be showing you what that is too. Actually, let's just go ahead and then hold on. Let's mark these out. Let's seriously do some good investigative work right now, okay? 7 months out from there, what do we get? We get a drop, right? And then it's on its way back up. Now, by the way, I'm doing 7 months. So I'm doing what we did from peak to peak last time. All right. So here, in this 7 months, about halfway between the 7 months, is when we get another high. So I wonder what this time frame is. 291. Okay, so less than a year. Now, granted, it didn't break the high at that point, but still, what did it do? After this dropped dramatically, rebounded, came back up, made a short-term high, it broke that one. So that right there is a break of structure. That right there should tell you, okay, things are starting to get bullish. It broke that break of structure that it created after falling back in February and March of 18. So that's what it should be telling you. That's where my brain would go anyway. And 291 days. Jeez. Or no, sorry, 550. Wait, is it 556? Yeah, 556. My bad. Jeez. Okay, so I'm working this all wrong. December 17th to June of 2019. Yeah, that's about 556 days. So that's about a year and a half that we had basically a kind of a lull, and then finally we came up, made a little bit of a peak in June of 19. I remember that. And then, yeah, I was going to say that was right around that 10,000 mark, 11,000 mark that we could not we couldn't get above. We couldn't get above it. It was hard. And everybody thought that was the resistance zone. Oh my God, it was a resistance zone. No, it wasn't a resistance zone, guys. What that was, right? Because if it was a resistance zone, this guy wouldn't have been able to get above it. Now would have. Nor would have the second one that got above it, that made 12,000, right? Instead, this was kind of a fake out, right? This was kind of a, hey, we're starting to get bullish, but guess what? Boom, we're going to pull back down. And then we had COVID, okay? So this is the area of COVID. So that sucked, but guess what? It still didn't get as low as what it could have been. It got pretty low, got down to 3,000, but geez, 3,000 in 2020, I don't think people ever imagined it ever getting to 3,000. So that is, if you look at that, that's a huge bright side. And then it didn't take long for it to rebound after that. Look, May, we're already back up to 10,000, 2 months later. And then it wasn't until August, I want to say. Yeah, I remember getting up to about 13,000, somewhere around there. And that's when I was like, holy crap, it finally broke 10,000. And whenever it did that, that's when I knew we were probably going to see some movement. Because I knew it wasn't going to break 10,000 and just fall. That would have been stupid. Because at the time, stock market was going up too. Stock market was doing very, very well. I was more of in Forex at that time, and also stock indices. But I still paid attention to Bitcoin. Now I heavily pay attention to it. So that being said, as soon as it made that small little valley, and then boom, it ran up and broke this high. Right, whatever this high was, 13,906. Interestingly enough, that high runs at the bottom of this monthly fair value gap. Interesting. How interesting of that. It's like they almost planned it. Oh, and look at this one too. At the high of the previous one. Also runs at the bottom of this crazy fair value gap. It's almost like smart money planned it. Wow. Yes, they do these things. It's all part of the algorithm. They have the money and the means to control these charts, and they will do it to suck you dry. Technical difficulty. Sorry about that. Stepped on my own wire. I need to get something for that. All right. Now, that being said, whenever we did have these huge rallies, that's when I started getting concerned, especially in February when Musk announced, he was going to do his treasuries and Bitcoin and stuff like that. And then I think this is it right here. Right. Yeah, this is it right here where it just took off. To me, that was not everybody in the world buying. That was institutions heavily buying. Because they knew that if they heavily bought then, they could get the rest of the retail crowd to buy with them. Right? And if they could get the rest of the retail crowd to buy with them, they could just stop at any point at buying. And the retail crowd would take care of it. And they probably did. I mean, I'm not for sure how much of this is institutional influence, these little drops here. I'm sure some of them are, most of them are. But then again, so is the rallies. The rallies are definitely influenced by the larger financial institutions. So, and then, we at the time that's when I was having my mentorship, and I was doing a lot of analysis on Bitcoin, and I had come to the conclusion that 56,000 was the highest it was going to go. And I was wrong. Was it 62? I can't remember. I remember if it was 58 or 62. I think it was 62 because my mentor called 65. And so I said 62. And I think it had to do with a couple of confluences between fibs and stuff like that. So I called 62. And so once it hit 62, I pulled all my money out. It was probably like right around here in 61. I think it was the second peak, because I remember it getting to the third peak and me being like, oh man, I should have stayed in. But then immediately afterwards, I was like, you know what? I'm glad I didn't. I'm glad I got out, because it did get up to about almost 65. I mean, my mentor was almost dead on about it. I couldn't believe it. And fell back down. And where did it stop? That's the question. All right. So, and that's the interesting things about these charts, right? Is going back on them and looking at them and checking out what happened, right? So, after it made its peak, 1, 2, 3 days later, major fall. I mean, it went from 65,000 to 50. And the funny thing is that there was probably so many retail traders buying and buying and buying, thinking that this thing was just going to go to the moon. It was never going to come back. Whenever the institutions saw their opportunity and took it, and they said there is a lot of buying happening right now from the retail traders, we are going to take them out and we are going to take their money. And sure enough, they did. And so they pulled it back down, got it equal with this guy, almost got it equal with this guy here. It was equal enough to be support, right? Support. Everybody would have considered that support. You see that? Everybody and their mother would have considered that pretty much support, because it's almost there. They're about equal lows. So it comes back up. Everybody's buying again. Oh, hit support. And then the institutions go wham, and then slam it below support, right? And the funny thing is that, well, this is the fair value gap here, and this guy came down to about the middle of it and then ran off. That's part of the algorithm right there, is seeing that fair value gap. Actually, I want to do the quick detour. Right, there's fair value gap from right, and now what I want to do is check out, see how far it went down. Almost 50% exactly. Look at that. That's why I always say check out your 50%. Check out halfway through your fair value gap. Check out halfway through your bullish order blocks. Check out halfway through your bearish order blocks. Because more than likely, it is going to come close to it, if not go barely just through it and then throttle off the other way. That is like the perfect moment for it to take off, is for it to get halfway through and then turn around. Just something I've seen over and over and over again. And again, everything I'm talking to you about today is not financial advice. It is just everything I have observed from my mentorship and smart money. Okay. And also paying attention to these charts whenever they were happening at these times. Right. So, Boom, comes down, jumps back up. Again, buying, buying, buying. Everybody's buying, thinking, okay, here we go again. And what happened? Here is what we call the bearish order block right here. Perfect. It even got more perfect than that. And actually, let me make sure that that is perfect by copying and pasting the numbers here. Okay. So you have the bottom of this, the last bullish candle that started making its way up before the peak, right? On the daily, on the daily, by the way. And then after it comes down and closes below it, now you have a bearish order block. Now, it didn't close below it here. That's the interesting thing. That's what I found interesting, is that this candle here did not close below these candles, right? These candles, maybe, I don't know if they did or not. Hold on, let me do a real quick look at what the closes were. 55,700 close, 55. Okay, so these did eventually close below it. Okay. So you do have a bearish order block now, right? But then these guys came down, closed below this as well. I would have possibly considered that to be a bearish order block, but I mean, you have one, then you had another day to where it didn't go down, two or another day where it did go down, and then the next day probably people were expecting it to go down again, and what does it do? Boom, the opposite way. That's what smart money does. They get you thinking it's going to start going down, 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 and then boom, they take it the other way on you because they think you're going to short it, and they capitalize off of it. So, all right, I'm going to try to get through this a little bit quicker. After such, right, so now we have the time period between April and June, right? I want to say it's April and June is when we have, April and June is when we have the fair value gap here. So you can see the fair value gap right here, as I have it in the green. And also the other fair value gap that we had talked about, and that was from between December and January. So it comes down, it creates a fair value gap, but also gets inside of the old fair value gap, right? Goes back up, touches the top of this fair value gap, comes back down, comes back up, comes back down. Fair value gap is basically completely filled, right? So that imbalance that it had created between January and November was filled. So now that it had been filled, boom, all right, takes off. You know, the imbalance is done. The price doesn't need to worry about the imbalance anymore. Everything is balanced, right? Boom, take off. What was the first thing it does? What was the first thing it aims for? Aims for this high. Why does it aim for these highs? Because there's liquidity above them, right? Any kind of equal highs that you see will have liquidity created above them. In artificial liquidity, basically. So what I mean by artificial liquidity is that these two highs will basically show noobs or any kind of retail trader that there's these two highs here. If it gets up close to it again, I guarantee you it's going to drop. You're right, because this is now resistance, right? Resistance, right? That's what equal highs represent to retail traders, right? Right? No, it's not. This is the difference between smart money and dumb money. Dumb money will see this as resistance. Smart money will see this as a way to take other people's money, right? So goes up, comes up close to it. What does it do? Boom, drops. Guarantee you, I don't know how many people probably sold off with that, but probably a lot. If anything, I wish volume indicators were actually real, but I don't think they are. I think there was a study done one time to show you that volume indicators were actually fake. Let me see if I can't find some kind of decent volume indicator. Total Bitcoin volume. Let me see what that does. Nothing. Does absolutely nothing. Volume comparison, maybe. Okay, maybe this will work. Look at this. Okay, perfect example. Perfect example. You can see the volume was all in here. All in here. It gets up close. Okay, so this gives you the volume by. Okay, that's kind of cool. Volume by central exchange. Why is Bitfinex so different than the rest of them? Everybody else looks kind of uniform. Bitfinex is just like really, really weird, don't you think? I mean, it's got the deepest and highest of all of them. As to where everything else is definitely kind of uniform. Huh. There must be something about Bitfinex. Anyway, all right, let's get back to this. So it runs up, gets to its high right here, right? So that peak right there, you can see it. Gets up there, pulls back, and as soon as it pulls back, what does the rest of everything do? It starts pulling back too. And even though it does break, it breaks that high. It looks like Bitfinex was the one that was the highest of the rest of them. Interesting. But the rest of them, looks like they didn't want to take that chance. They didn't want to chance it. They thought it was going to sell. And look, boom, they started selling off. And then as soon as they started selling off, boom, takes off. Which is interesting to see how even and level this is. Right? How is this even and level whenever this is the point after, I don't know how many months, 4 months, 5 months, that the volume doesn't do anything, but the chart goes up? Isn't that odd? See, this is what I'm saying. That this is, I believe a lot of this has to do with an algorithm. I mean, just seeing it like this doesn't make sense. Doesn't make sense. Seeing all that flatness right there whenever we had a huge run up makes no sense. There was no volume. Everybody was sitting on their hands at this point whenever the price was running up. Nobody was trading because nobody knew what it was going to do. Everybody was afraid it was going to fall. They didn't think it was going to run up. And then we have this right here. And look, the FOMO sets in. Look at this. FOMO set in hard. We got boom, 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 all the way up into the top. And as soon as it gets to the top, that's where you see that spike. And as soon as it got to the top, boom, it dropped out of the bottom. Wow. All right, so dropped out of the bottom. So guess what? We are now in the fair value gap from in between April and June. So the May fair value gap. Looks like it is just trying to, to me, this is how I think of things. The price is just trying to fill up that gap, right? And that's what it does. It fills up that gap, and it fills up that gap quite nicely. And once it gets done filling up that gap, boom, it gets out of there, right? It doesn't have to slowly make its way out or anything like that. What it did is that it ran up, made somewhat equal highs, fell back down, and then boom, ran up again. Broke high, break of structure, right? Then to me, that's awesome. That's just simply amazing that it made that break of structure. Look down here. Look at this volume by exchange. They didn't know what to do. I mean, kind of, but not really. I mean, the volume wasn't like out of this world until we get. I mean, even the peaks. Bitfinex had the peaks. And even then, they weren't anything special as compared to anything else. That's the craziest thing. So either the rich people are on Bitfinex, and that's what's causing these volume spikes, or it's the algorithm. And it could be a mixture of both. It could be that the rich people are on Bitfinex because they know about the algorithm. But I don't like Bitfinex's trading module. I really don't. Anyways, I put breaker here. And why did I put breaker here? Well, if you ever heard me talk about a breaker, you know that a breaker is a down, up, down moment, or an up, down, up moment. And when I mean that, I mean low, high, lower low, right? So there needs to be a lower low after that. So you can see the low from this red candle. You get the green candle coming up, and you got the red candle that breaks down below that, right? So that low, high, lower low. Well, that green candle up here, that is considered your breaker, right? And actually, this other green candle here could be considered one too, because you have a low, high, lower low, right? And same thing here, low, high, lower low. You got a couple of them right in the same area, which is interesting because once we get back over and it comes up to these players, guess what? That's what they're hitting. They're hitting those breakers. And those breakers act as basically support or resistance. They don't act as anything else. And to break that resistance, you will usually see a big run up through it, and that's it. You won't see. I mean, this is kind of rare, but not really. It looks like it already broke the structure of the high, so you could tell it didn't want to come back down below that. So it gets caught in the breaker, and you can tell it just wants to break through, and eventually it does. So, and when it does, boom, it does it with a vengeance. And then it breaks this structure, right? So that would be this high right here. And then it comes up, and it looks like it hits the bearish order block of the first peak, which would be the last up candle of the body, last body of the up candle, before the next candle breaks below it and closes below it. So it does. It hits. I mean, that's you couldn't ask for a better bearish order block than that. And that's what I would have been expecting as well. So bearish order block right there, top center, boom. And probably should have changed the color on that. All right. Bearish order block backs away, comes back, touch the top of the breakers, right? Let me draw another one around this one. Because there's literally 3 breakers right here in this area. Look at that. Perfect. I mean, to the T. It falls on this breaker. So boom, hits the breaker. And then what does it do? Breaker rejects it, acts as support, right? This is what really acts as support, is these breakers. Okay? Remember that. That's what really acts as support. If it can break through it, yeah, I'm assuming that's why it's called a breaker. If it can break through it, then damn. It's pretty much support. For a little bit anyway. But yeah, it comes back down, touches it, and then pulls up, and then comes back down, touches the bottom of the breaker, which you will see that's common, and then pulls up and stays above the breaker. And it's just kind of staying even with, the previous peak almost. And then all of a sudden, boom, breaks to a new peak. And then as soon as it breaks to a new peak, pulls back down. Right? Now, here's the interesting part, is that since it did pull up, I am looking for a couple different things. Right? First of all, fair value gap. Is there one in the daily? Yes, there is. Right here. All right. Interesting. I like to see this, and I'm going to tell you why in a little bit. So, there's one of them. Here's the second. Notice anything? Okay, so if you didn't, kind of give you a little hint here. After 2 days, it drops, right? It drops into the second fair value gap. So the first one, getting filled, I should say. Getting filled. Not full, but getting filled. So it likes to take its time to make sure those imbalances are full, right? And so it pulls back up, comes in, comes down again, doesn't like that, pulls back up, boom, goes to the top, full. Drops to the bottom, full. It has completed the fair value gap. So now it's like, oh, fair value gap done. Now, this is the interesting part. Drop. The drop below these two equals is what is intriguing to me. Somewhat equals. Semi-equals is what we'll call them. So that tells me right there, right, is that there could have been some kind of maybe small type of man-made liquidity, something like that, which is why it started pulling back up, right? Because everybody started buying, thinking that, probably shouldn't have gotten below that. Maybe it won't close below that, but then it closed below these. Closed below these two lows. And then as soon as it did that, it got a little bit higher and made to try to get a little bit higher. But then, as you can see, the body of these three candles going up, all three of those would be considered your bearish order block. All three of them. Because it's basically one big candle. And why is it one big candle? Let me remove this really quick just to show you. I'm going to put it back. Because there's no wicks that are overlapping. Like if there would have been a big wick right here that came all the way up to here, then then there wouldn't have been a fair value gap, for one. I don't think this candle would have tried to break down as quickly. And then you also wouldn't have had this as your bearish order block. If that would have, if this would have had a huge wick that came off the top of it, then it would have been your next one. Then that would have been your fair value gap. As long as those two were still in a row, had fair value gaps in them, whatever, right? So let's back up to now. Why was I excited about this part? Because it's not balanced. Look at it. Not balanced. It may have ran through it. It may have quite a bit of trading, in this area. But on this side of it, what's on this side of it? Nothing. Nothing at all. It doesn't even come back up and try to even get into this fair value gap. This tells me it's coming back up. That's exactly what this tells me. This tells me it's coming back up. When? I don't know. I cannot tell you that. I am not God. I can just read these things. Okay. That's all I can tell you. All right. And now, and that was what, October or November is when we had that spike. Yeah. Okay. So we had that spike in November. And then, December wasn't that great. November wasn't that great. We haven't really had really anything that's been that great recently, have we? We had daily fair value gap. I remember this. I remember this big drop. That was crazy. Pulls back up. And it looks like here we had a little bit of a fair value gap on the daily. And it has been filled. Kind of, I guess you could say. But it has been filled. Meaning that the next time it does come to this area, it should just run it. I'm just going to run this to the future. So that's two of them. The first one, it should run completely. This one, it might have some struggles with, or it might not, because of the market maker buy or sell model. Once it gets down to the bottom and it's done with its sell program, and it starts a buy program, it can come up here and say, hey, I've spent time in this area, the algorithm anyway. Therefore, I don't need to spend time in this area again. And we could see maybe a little bit of time spent around here, and then boom, probably another takeoff. Right? And then I don't know about 86,000. I mean, we almost got to 70, maybe 86. Geez. But then again, Bitcoin does have wild swings. But whenever we did have two peaks within 7 months of each other, right? Those peaks weren't all that different, right? So we had a peak that was about 6,400 and a peak that was about 6,800. So it was only about $4,000 difference. Now, will that happen again? Will it only get 72? I don't know. So what's going on today? That brings us to today. I'm sorry I'm rambling, but I'm hoping that you're paying attention to this, and that you're kind of seeing this all play out, and you're understanding the smart money aspect of it. You're understanding the people behind, the people behind the curtains, I should say, that you're really understanding that, because once you understand that, then you can really start to formulate biases, and that's when you can use your futures, right? This is what I stopped doing. Okay, so I know a lot of people want to find that coin, and they want to put in thousands and thousands of dollars to it and hold on to it for dear life and hope that it grows 5 times. Whenever you don't have to worry about that, you can play futures 5 times a day, and it does that. It's that simple. It really is. It's that simple. So stop it with this buying up of coins. I mean, and unless it's a really cool project that you believe in, that you think is going to, like, just take off, or it's just a cool project that you believe in, that you want to support. I have no problem with you doing what what you do with your money. That's your decision. But what I want to try to do is to try to help you eliminate stupid decision making, right? Like holding on to coins for millions and millions of years, right? To be honest, when I shouldn't have probably thrown all my money in Nexo. Maybe I shouldn't have done that, even though it's gaining APR. Maybe I should have took all that money and instead put it in my same account that I'm using to build. That way I could have built it quicker. Because I probably could have, to be honest. And I think you can too, if you learn exactly how to play this correctly, right? All right, so now, recently, guess what? We are in a new we dropped below the previous lows, right, back from last July. At the bottom of the monthly fair value gap, we entered a new monthly fair value gap, right? The one that I was worried about, we entered it. Do I think we're done? No. I do not think we are done at all. Not at all. I mean, look at what it's done so far. And we're looking at the daily. It dropped pretty quickly down straight through that old fair value gap, comes down, hits the weekly fair value gap, bounces off that, gets back out of the monthly, and now we're playing in the old monthly again. Now, if you don't recall, we have already fulfilled that monthly fair value gap. We don't need to be in here. So to me, this is the algorithm playing with us. This is definitely the algorithm playing with us. What I think is going to happen is, if you look over here, where that weekly fair value gap was, what else do you have? You have a high, low, higher high. What does that mean? That means your last down candle is a breaker. That can mean two things. That can mean that this is going to be considered your support, and it could come all the way down to the bottom of it, close to about 2200, 2100, somewhere around there. Smack through it, whatever. And that's also going to break through the halfway point of the fair value gap, the monthly fair value gap, which we call consequential encroachment, but it breaks through the halfway point, fills up maybe the breaker, and I don't know how long it could sit here for. It could sit here for 3 months like it did last year. It could sit here for 2 weeks. But as long as it does drop down in here and fill these imbalances, that's what I'm looking for. That I am not looking for it to get up higher. I am really not. Somebody said something about 36 today in a chat room. And if you listen to me, you know who I am. I struck you down pretty quick. I did. And you know what? There may be a possibility that it could get up to 36. But I mean, I got my cursor there now. I mean, like, I see what he's saying. But no, I just don't see it happening. Why? Because if we're going from the daily, and here's another little trick from smart money. Whenever you're going from a large time frame, generally your reaction will come from a smaller time frame. Right? Okay. So what we have here on a smaller time frame in this 4 hour, we got kind of some equal highs ish, but not really. So, but what we do have, is look at all those lows, those equal lows. That does not, well, it shows to me that it is ready to drop. Now, what it could do, and I'm going to get out the path for this, is that since we do have these equal highs right here, what I'm thinking is that it could easily get up to here, maybe even break the high. I'm not for sure. When I mean high, I mean this guy right here. I don't even know if you even see that or not. So I will draw a little ellipse around it. That guy right there. All right. God, did it again. I hate shortcuts. Sometimes they're different for everybody. Anyway, here we go. Let's do this. Never mind. That didn't work either. All right. One more time. Sorry, guys. All right, there we go. So, what I think we could see out of this, I don't know, maybe it plays with it a little bit, and then it breaks the highs, right? Gets everybody thinking it's going to start moving up, pulls down just a little bit, comes back up, either hits the same high or breaks it just a little bit, and then that's when we see the drop. Why do we see a drop? Because there's equal lows. Why do equal lows represent a drop? Because that is manufactured liquidity. That is where people have their longs placed, right? So a visualization of this, and I've done this before, it would be a long, put it up just a little bit, and then what people would be looking for as far as where it would stop, probably what the guy told me, around somewhere around 36,000, right? I mean, so let's just go there. Yeah, right around there, 36,000. And then they would expect it to have some kind of short stop loss. Why? Because it's already hit 1, 2, 3 times on this what you would call support. So since it's hit 1, 2, 3 times on support, everybody thinks it's going to come back down. 4th time, boom, take off. Right? No, at that point, it probably would maybe bounce a little bit and then drop out of the sky. That's what I'm thinking is going to happen. Get to consequential encroachment, get to the breaker, get to about 2100, 2900, 2200, somewhere around there. Maybe even get as low as 1950 or whatever it is. The high from the 2017 run. So that's what I'm looking for. I mean, and you can see it in this formation. It's kind of squiggly, kind of squabbly. It doesn't really have a direction. But what it does have is equal lows. So therefore, this tells me this thing's going to drop. And look, we're already oversold. We're oversold. And it looks like we were, if you do this volume comparison thing, it looks like there was no volume happening here. All of a sudden it started to pick up. Now it's dropping off again. Okay. So I know that was a very, very long time to explain Bitcoin to you. But I hope you understood the premise. So, thank you very much for watching. I'll probably be coming out with another video very, very shortly regarding some other ones, probably Ethereum and some layer 2s. But I wanted to go ahead and do a Bitcoin one, get this one released. That way people can see it, hopefully chew on it a little bit, and yeah. Have a great day, and I hope you have a wonderful, wonderful trading evening. Now, before I go, though, what I want to talk to you about was about forming these biases, right? So, again, whenever you see something like this happen, right, and you see these fair value gaps, right? Again, this is what price wants to do. Price wants to fill it. Okay? So if price does want to fill a fair value gap, it's probably going to try to. Right? So that's why my bias from Ethereum and from Bitcoin has been to the sell side. Right? Not Monero. Monero is a completely different beast. I have a feeling that thing's going to be trying to move its way up. But until I see Bitcoin break this 2400 line, I'll be shorting it, right? That's just my personal opinion. I'm going to wait to see if it comes up and tries to make equal highs with this guy, and then we'll see what happens after that. Okay? All right, but thanks again for watching. And always remember to wear pants.